Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, May 9th, 2018. I wanted to do a quick update on the markets because we've had some changes recently. In recent videos, I pointed out these oversold readings on the 60-minute time frame. We're actually looking at a 30-minute here. Let me jump back to a 60-minute. I don't have all the areas circled, but well, we'll do that real quick for those of you that haven't caught up on the recent analysis. Looking at these overbought readings in conjunction with bearish crossovers on the PPI, which has in every instance since the top back in late January led to some reaction or pullbacks, I should say, corrections ranging from this relatively minor one that was the smallest. Most of those were a lot deeper. And as I mentioned, one thing I'd like to look for in the market is a change of character. And so far, we've seen a change of character because we haven't played out. Usually, once you had the overbought reading, and then it was followed shortly thereafter with the bearish crossover, the selling started pretty impulsively. You can see that. Maybe you went down, had a little quick pullback, consolidate a little, and then dropped. We're not seeing that. We're seeing the opposite. So, I mentioned the other day, last week, I think, or earlier this week, there's this potential for a bull flag pattern, and that still may very well play out. But I'm going to show you, well, I'll give you that and just tell you that simply the measurement of a bull flag continuation pattern, you take the flagpole, which is the move leading up to that formation of the pattern, and then you add that to the bottom of the flag. Now I didn't duplicate that line. That's usually how I do it. I'll take a chart, uh, do a parallel trend line or duplicate the trend line and add it. But I can just eyeball it and tell you right there, that's that massive gap. This is a big gap. A lot of eyes are on. Let me clear out these annotations here and make that a little more clear. My apologies there. This big gap here from back in mid-May, or March. I'm sorry, mid-March. So that's a natural target, as is the bottom of that gap. Gaps act as support and resistance when tested. So you have the bottom of the gap at roughly 168.90, top of the gap at roughly 178.80, a little bit below that. So that would be your bullish scenario. Now, the bearish scenario is not completely wiped out yet. What we have here, and you can see it on the 60-minute chart. I'll show it on the 30-minute chart. It stands out a little clearer. We have potential negative divergence, and I use that term potential, meaning it's not confirmed, anything but. We have the indicators, in this case, the PPO clearly pointed higher, as is the RSI, which means they have the potential, if the market continues to rally and that bullish bull flag scenario plays out, then these divergences will be negated or taken out, meaning the PPO will have taken out the previous reaction highs as well as the RSI, and at that point you no longer have negative divergence. But as it stands now, that is there, and if there's one thing this market has taught us for the past few months, is that it is, we've been in these trends of these what I call micro rips and dips, or micro trends really, going back again, jump back to the 60-minute chart, and that's what so far 2018 has been marked by, these very powerful and swift, nearly unidirectional rips and dips. Um, Sooner or later, as I said, we'll break out of this trading range, but until we do, that has been the trend. There's been a little bit of this was a brief area of consolidation, and now a pretty impulsive move up. So that's that. Let me look at the futures chart, and I'll wrap this up. I don't want to there's no need to do a very long video. Just wanted to cover, let's see here, it's NQ. Uh, I like to watch the futures charts because it gives you a little more insight to what's going on, since the futures are trading around the clock, unlike QQQ. So sometimes you can spot out some divergences and other technical developments that you might not catch on the QQQ chart. So this chart goes back, it's a 60-minute chart. Looks like it's going back here to about mid-March, and the only thing that I like better than on 60-minute chart, an oversold or overbought reading followed by a bullish or bearish crossover, are divergent highs and lows. So if you followed me for a while, that's really what I sit back and wait for, and that's the way to position for those tradable swing trades. I'm talking not just a quick day trade or 1 or 2 day trade, but trades that can last normally for weeks or months, but in this market, again, this market is as if somebody's hit the fast forward button. So these micro trends are lasting just days to a couple weeks instead of a couple weeks to a couple months, as is usually the case when you have divergent highs and lows on the 60-minute charts. But the good takeaway from that is you're getting the same percentage gains. You're just getting those in a lot quicker order here. If you can make 5-6% on QQQ in just a few days or a couple weeks, get out, and especially if you're using a leverage ETF. So what we're looking at again is just going back on the 60-minute charts, and these are those divergent highs and lows. And they were pointed out at the time. There was a divergent lows, three consecutive divergent lows, each one leading to its own little rally. So it's not as if those first two didn't play out, but it was that third consecutive divergent low that really marked the bottom there, led to that rally, which was once again terminated with a divergent high there, negative divergence on the PPO, which was then, of course, followed by this correction leading down to, yes, you guessed it, another divergent low, meaning positive divergence. And there's even smaller micro divergences within here. These are very small divergences, but they did play out for trend reversals. And unless I missed one here, and if I did, feel free to point it out. I don't believe I've missed any divergent highs or lows. Everyone has played out for a trend reversal, a tradable trend reversal. This was the most recent divergent low back here. It was pointed out last week. And so far, it's playing out for a rally. Now, where we're at today, again, I can't emphasize this enough. We have only what I call potential negative divergence, because if you look at on the NQE minis here, these are the NASDAQ 100 futures, the PPO, which is a momentum indicator, is clearly pointed higher, straight up. I've been walking these lines up all day, meaning if it continues to rally, this line's going to go up here. The RSI will come up here until and unless they get above these previous reaction highs. We're still going to have that potential negative divergence. But in my book, that divergence will become confirmed once we roll back down. And you can see we have a fairly well-defined trend line right here. Well, that's where it starts. Let me just underline it for you. You can see a pretty well-defined trend line. So we have the makings here of a bearish rising wedge on the 60-minute chart, one of my favorite patterns. And we also have, you can see, pretty significant resistance level at 69.27. So there's a scenario right there that if this rally continues to run for a little bit, maybe even today into the close or before the close, that's certainly a level where this wedge would remain intact. The divergences would remain intact. They'd grow a little bit larger, and then you would have a sell signal on a break of this trend line, which would also coincide roughly with that 68.52 support. So there it is on the NQ 60-minute chart. We'll take a look at the ES, which are the S&P 500 E-minis, and then we'll wrap it up. Okay, sorry about that interruption. Here's that ES 60-minute chart, divergent low right there. Again, going back to early to mid-March. Divergent low, we had a divergent high leading up to the correction there. That's to the left of the chart, and that played out certainly for a correction. Divergent low there, you can see. So same old story, wash, rinse, repeat. Look for these divergent lows. You can, get ahead of them at times, but sometimes during an uptrend you can get hurt trying to catch a rising or falling knife. But your sell signal typically comes on the breakdown. So here, this was the wedge pattern we had. This trend line, and this is your divergence line right there. There was your breakdown, back test, and a little kickback rally. This I had as an alternative trend line here, which we broke down, back tested that a little. But again, that divergent high there played out for that pretty significant correction. In fact, this was just a micro or very small divergence within there that led to a kickback rally. So the real correction off that bigger divergent high was this ABC down right here that now we have. Again, I didn't draw it out here. This chart's not fully annotated, but there was some bullish divergence there at the lows. Clearly, I had that shown on the NQ. This is the ES chart. So there it is. Same story. You can see the 60-minute divergences, potential divergences. So we'll watch those. I don't have all the levels marked on this chart right now. You just look for these previous reaction highs. There's some reactions right here. So we have the ES at resistance now. In fact, let me add a line there for you real quick, and we'll look at that level, why I think that's a valid level. Where did it go? Let's see one more time. At horizontal line right there. You have reactions right here. And you go back, you have a reaction right here. So there's a couple reactions, and then your next stop or the next significant resistance level, of course, would be that reaction high. That's a pretty significant level. So there it is. And so right now, as it stands, the bullish my more bullish scenario from this point in time, I didn't expect, wasn't expecting this kickback rally, but doesn't surprise me at all, based on how things have been trending in this market. We have these pretty strong rips. Like I said, that sell signal that we had was burned through so far because we made new highs and we crossed back over on the PPO. We made that bullish crossover. I'm referring to the 60-minute charts, the overbought conditions with the bearish PPO crossovers. But if we kick a little higher, there's some resistance, and again, there's still the potential for a significant trend change if these divergences are confirmed, and if we break below trend. That's a trend line to watch right now. So that's going to take one of two things. Either we're going to sell off in the last half hour of today, confirming these divergences today, or maybe we continue to rally into the close, hit those resistance levels I showed you there on QQQ, NQ, and ES, and then reverse. And if it's more than that, then it's more than that. And if we start to continue on higher from here, smash through or power through these potential divergences and bearish signals, and we keep smashing through one resistance level after another, like it's not even there, then we may go on and likely will go on to challenge the new highs in the market. But right now, I'll wrap it up with this. Just let's not forget the bigger picture, which is we are inside a trading range, and everything within that trading range is just noise, for the most part, especially if you're not a very active trader. You can see the market has just trended, gone nowhere throughout the year so far. Again, that's an understatement. It's gone, we've had a lot of rips and dips within there, but for the most part, we're back about where we started, maybe a little bit above where we started the year. There's where we started the year. No, you can see that right here. I'm holding the crosshairs on January 2nd. There it is, first trading day of the year. And so you can see the S&P 500 with all these ups and downs is about exactly where we started the year out. So again, it's hard to draw too much from any one day rally like today. The market, SPY is up 1%. Like I say, up 1% or 2% today, down 1 or 2 tomorrow. This is just the new norm, and it has been throughout this year. Intraday price swings of 3% from the lows to highs is not unusual, and we continue to see that. So like I said, messy long-term charts, but a lot of the long-term trend lines and indicators are still bullish, so you can't write this market off yet. And we do have quite a few key sectors and stocks that are also taking out some key uptrend lines. And bottom line, it's just a mixed bag of technicals right now. A lot of bullish technical developments, and as well as some bearish ones. So tough trading until this trading range resolves, but we'll watch. And right now, like I said, I think those divergences will play out. So I see limited upside in QQQ and SPY, despite the fact that sell signal that I was looking for, those overbought readings and bearish crossovers, so far haven't manifested in the form of a correction. This one's a little bit different, as I said, but again, it's not over yet because we have those potential divergences. And here's a SPY 60-minute. You can see these divergences that were highlighted last week, playing out for this move so far, which seems maybe an ABC move, little A up, B down, C up, and again. So there's right now, I think let's just say my I don't want to say my uppermost target, but I guess I will go ahead and say that right now to keep this bearish case intact is around that 271.21 level for SPY. I tend to put a lot of focus on QQQ, but I know a lot of you guys trade the SPY and watch that as well. And then, of course, you have a big old gap up here. It's not nearly as big as the gap on QQQ, but that will be a very important and significant gap and resistance zone if and when SPY gets there. So those are levels to watch. But even if it takes it out, guys, we're not, the market's not out of the woods yet. Like I say, we have a lot of support and reaction lows down below and a lot above. And the bottom line is that we're just in this trading range. Seems to be contracting now somewhat, which is usually a sign that the market's building energy. You have a downtrend line off the highs, you have an uptrend line off the lows, give or take. So it's this triangle-ish type pattern, and still can go either way. All right, I'll update you if anything changes, but that's what I'm looking at for now. Hard to say. We'll just have to watch. I have no idea if this market will reverse into the close today or rally into the close, and if it does, then we'll see how much more upside there is left tomorrow, or if we start to reverse then. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.